Welcome to my weekly review. Today is Saturday, March 29th. So there's no selling today. The selling has stopped. We waved the white flag Friday afternoon at 4 p.m. Eastern Time. Then you're looking at a weekly chart of the Nasdaq. Thank you for turning into my weekly review. We have an interesting market here, a lot going on, a lot of noise, but I just kind of look at the charts and it kind of tells me, it's my guide for investing and how, long I want to be in this market. Right now, not very long. I'm starting with the weekly chart because I just want to point out, first of all, the thing that we got to take notice here is that it's been below its 200. This is the 40 week. It's been below its 200 simple moving average for the entire month of March. And this is how bear markets start. We can see here, this is the end of 2021 when the Nasdaq topped at 16,212 in November, traded below its 200, stayed there for 11 months before we, hit a low and then made this rally. We did have a three wave down rally in the summer of 2023, excuse me, a rally, a three wave down correction down to the 40-week line before, starting this, massive rally. Then we had a nice little downturn or correction last year, but then continued to the rally to the 20,204 high from December 16, 2024. Now we've corrected 14.5%. I'm going to go to the daily chart to show you this because I did that for a reason. The three wave down before was below the 200, excuse me, it was above the 200. Now we're below it. And I think we're looking at, I don't know, this is our third wave down here. This is 6.5% correction from that 20,204, which was previously mentioned. We rallied up to a lower low. We saw a series of lower lows here from the 20,204. Could not make a new high, excuse me, a lower high. Talking backwards this morning. Haven't had my first cup of coffee. Anyway, here's your first wave down. Then you had your second wave down to 17,238. And we had this little, bear wedge pattern that I've been talking about. You have this waterfall, then you got the hockey stick, and now it broke, the bear wedge on Friday when it traded down 481 points or 2.7%. I believe this is the start of the third wave down. You could have differing opinions. If I go to the weekly here, this could be perceived as the first wave down, and now we're starting the second wave down as well. This could be perceived as just one wave. Now we have this bear wedge pattern, and we're starting the second wave. The Nasdaq closed 6.2% below this 200 simple moving average. Like I said, it's been below the 200, this black line here for the entire month of March. So, 1 month already in below the 200. It could stay down there. We saw it do this back in 2022. It did this once it broke below, this waterfall type of action, this vertical violation, it stayed below there for an entire year. So I just want to keep that in mind right here, this entire year below the now I can go back to 2018, 2019 correction where Trump was in office and he was jousting with Powell about interest rates, kind of like what we have now. And we saw this three wave down action here below the 200. So we could be looking at something like this here. There's your second wave down. So it got rejected at the 200 twice before making that third wave down and the rally back through. So, you just got to be flexible and keep an open mind. They're jousting once again about interest rates. This is all about interest rates. Like I said, this could be, perceived as the first wave down. I see this as the second wave down, though, so I'll get some, blowback from that. I don't really care, though. I mean, time will tell, right? To me, this is the third wave down. So it rallied up once to the 200 and got rejected. Maybe it'll rally up again and get rejected. We'll have a third wave down. I'm just trying to be open-minded and flexible maybe this is just, the first wave down below the 200. Maybe we have more pain ahead, so it could be interpreted both ways, but you just take it one day at a time. Anyway, I don't trade the indexes, I trade stocks. I'm just going over, here's the SPY trading is 9.4% below its 52-week high, and you can see it's just consolidating still within a flat base, but it's below its 200 once again. That's the danger zone here. This is your classic bear wedge action, and it broke below. It rallied up to its 200, got rejected, traded below, but it did not take out the 549. So that's what I'm looking for, is it to trade below and make a new low here. You have this once again, you have the low here at 575, rallied up to 613. This one made a new high, so you have a divergence here. So the 609 was the old high, made a new high of 613. Let me get the exact date on that. February 19th. And then so this made its to me, this is its second leg down below the 200, forms this bear wedge pattern, rejected at the 200, and makes another wave down. The third wave should take out the 549.68, close at 556.66. So just take it one day at a time. And then the RSP was not down as much on Friday as the SPY due to, Tesla was holding up. I'll get there in a minute. Tesla was up last week, and which kind of held up the RSP, which is equal weighted. The SPY is market cap weighted in the S&P. So with Tesla being up 6% last week, that's why these SPY outperformed the RSP, the equal weight, the 493 stocks. Anyway, I just show that as a breadth indicator. But if you're holding these growth stocks, it really doesn't matter. You're getting hammered and punished in the market. I'm going to get there in a minute, but I just wanted to, point out some earnings. I'm still a big believer in earnings. Earnings drive the stock market, and we heard from some companies last week. KB kind of confirmed what we've heard from the home builders recently. The CEO tried to paint a nice picture, but this thing's in a clear downtrend. And I've got to go to the weekly chart. They reported earlier in the week and was down, 3.3%. And you can see this is clearly in a downtrend. OKLO, they reported last week. Yeah, not a great response, down 17.5%. CSIQ, which is a solar stock. So you got nuclear, solar energy. This one's in a clear downtrend. Man, their CEO was, yeah, well, like my mom says, if you can't say something nice, don't say anything. So I'm not going to say it. CHWY reported last week, down 5%. So not a great reaction. We all love our pets, want to take care of our pets. CHWY, though, clearly in a downtrend here, maybe just forming a base. And it doesn't look too bad in comparison to some of the other stocks that are below their 200. Cintas reported, a pretty decent report, but had a nice reaction. It's just the market that we're in, though. Nice cup with handle pattern, nice reaction, rally back through the 50. It's just with the market selling off the way, it has. This thing was up, 6% last week, but just overall selling pressure from the general market kind of held that thing back a little bit. Dollar Tree, they bought Family Dollar for 9 billion, sold it for 1 billion. That's not how you do business, folks. But it had a delayed reaction to its earnings report. It was up 9% last week. The first day that it reported was kind of flat and then rallied on Wednesday and Thursday. So yeah, the 3% move Wednesday, 11% on Thursday, and like everything else on Friday, pretty much sold off. PAYX reported last week. Not a bad response to a decent report. Once again, the market pressure is, selling pressure from the general market held it back, up 5.5% last week, which is great, in comparison to some of the others. LULU reported, the CEO is talking about brand awareness. That's not their problem. They're getting, first of all, it's a Canadian company, and obviously there's been geopolitical issues with, holding this one back, but they don't have a brand awareness problem. They have a competition problem. And that, some of these other upstart companies are taking market share from them. There you could see the nice reaction on Friday, down 14% to their earnings report. But I want to, say, HROW, a drug stock, had a report, and I think they had a pretty decent week last week. Nope, down 7% last week. Um, Following a nice 23% move the prior week, give back 7 last week following their earnings report. But they got 84%, 44% to 84% sales growth. So it was a good report. I think that's it. Oh, no, I have a couple more. One more anyway. Going with the Lululemon, the apparel is a tough market for apparel. We know the economy's slowing. This is what is this? The Tommy Bahama company, down 47% off its high. Um, yeah, just a tough market for retailers. So anyway, that's it for me. Excuse me, that's it for the earnings report. I have to get to what is working in the market and what's not working. And obviously with the tariff news, auto dealers were not working last week. General Motors took a gut punch, down 6%, and a Ford. Same thing, down only 3%, not as bad as General Motors, but these is not good news for them. STLA, the maker of Jeep. This is Stellantis. What else do they make here? I forget. Anyway, auto manufacturer not looking so hot here, down 6% on the tariff news. Toyota Motors, obviously not manufacturing much in the United States, down 6% last week. Ferrari, they did say that they were going to pass along their uh, mm, cost, the tariff cost to the consumers, whatever it is, 5%, 10%, 20%. They're passing it along. Their clientele's a little different. I was corrected in saying, I said, their cars are like 100, 200 grand, but I guess they're 400 or 500. So just inflation, right? They're passing it on to their clients, only 15% off of their 52-week high, but it's just a tough market, right now. And then Tesla obviously was the beneficiary of the administration's new policies. Um, Still below the 200. Tesla rallied up to the 200. Looks like a rejection here, but in between the 10 and the 200, it's just a battleground stock. I can't, I stay away from battleground stocks. Anyway, I do want to point out some stocks that are showing strength, real strength here. And I'm going to just start with, the gold miners because these are the ones that are doing best in this market. The industry group is a top industry group. You can see right here, gold, silver miners, number one ranked, number one performing by a lot. This is AU up 4.26%. And if you just want to look at the, some of these miners over time. I know what Harmony's had a good run. AEM, just all of them are just 60, 70, 80% higher. You can go to gold or R gold or DRD, they're all just up a lot. It's just varying degrees of how much they're up in the last year. There's Orla mining from Canada up 141%. Um, GFI, AGI, they're all just up a lot. Okay. So I just want to point that out. It's like shooting fish in a barrel. It's rarely this easy in the stock market, but these are the ones that are showing strength. When the Nasdaq is down like it was last week, more than 2%, and AU's up 4.2%, that's all you really need to know. You don't need to know much more. This is what's showing strength. I mean, I'm not saying buy these here, they're extended. I'm just showing obvious strength. I mentioned Wheaton Precious Metals, Canadian number, doing great. Orla mining, so I can go on and on. There's a ton of these, but I'm not going to. I'm going to move on because I do this every day and people are tired of looking at the same stocks. The insurance names, and believe me, when we have our, full correction, when the market, finally corrects, like I said, the second or third wave down. By the time we get to the bottom of this correction, all of these will be down because, there will be no place to hide. You cannot hide in a downtrend. And these are temporarily doing well, but eventually, you just can't hide in this bunker. They'll get these ones too. This is the insurance name, Brown and Brown, bro, up, 3.72% last week. You can't argue with the performance. Just acknowledging it, 2.2% move for Progressive. This is where your strength is. Like I say, I'm not saying buy these. These are not, all set up and they're liable to get sold like the rest of the stocks in the stock market. They'll get around to these. Ryan was up 2.6%. I actually like the daily chart on Ryan. You can see here trading tight within a base, but it's hard for me to buy and get real long in this market. Uncle Warren, everybody's hiding in his bunker. Sold off down to the 10. Yeah, imagine that. Selling up down to the 10 on Friday, but up, last week. Everybody's trying to hide with Uncle Warren's company, WRB, which is WR Berkeley. Yeah, nice move last week, up 12%. PLMR, up, nearly 6%. So these are the areas that are showing strength. I'm just showing you this. I've had a couple of these on our ready list last week, and you can find some strength in the oil and gas stocks as well. The gold and silver miners, the insurance stocks, and some of the oil stocks and utilities, energy. But you can also run into stuff like this. That's EXE, Expand Energy. But you can also run into stuff like Landbridge, which is down nearly 10% last week. So you just can't just buy any oil and gas stock. It's really hit and miss here. And the longs here got hammered, especially on Friday, down nearly 6%. AM is Antero Midstream. Had a nice week last week, right? Up, nearly 1%, while the rest of the market. And you can see just clearly in an uptrend. As you can see, the RS line heading due north, but this market's tough. I'm not going to sit here and try to sugarcoat it with some of these rare birds, endangered species that are doing well. There's not a lot of them. This is utilities, NI utility stock up nearly 2% last week. Duke, I'm not really interested in these. Are slower movers. They're defensive names. They're dividend payers. But I'm just once again recognizing strength in a weak tape. This is WEC Energy up nearly 1%. So yeah, the gold miners, the insurance, the oil, the Utes are doing well. Now, I also, had high hopes that the drug stocks and some of the cybersecurity names could be leaders as we had, a quasi follow-through day. But if you don't have any leading stocks performing well, you don't have an uptrend. And I couldn't find any leading stocks that I really like. Some of the drug names like Gilead bouncing, off their moving averages, definitely something to watch. If the market wants to, end its correction and rebound. I'm looking at some of these names like Gilead or Amgen, not bad. Um, some of these larger stocks like Novartis. I know it's a European name, but setting up in a base, and I'm just trying to keep an open mind. Some of the other ones that I like are some of the smaller names with real growth. That's what I look for is the growth stocks are eventually going to, if you have 1 or 2 quarters, that's something else. But you have quarter after quarter, year after year of sales and earnings growth, that stock's going to be rewarded over time. That's how Apple and Amazon and Google did it over time, years and years and years of accelerating sales and earnings growth. And so this stock down 8% off its high, down 7% last week. But it made this move off the lows. It was up 27%, and then 6%, and then 5%. So it gave back 7% last week. To me, if we look at a daily chart, this thing is just pulling back to its old buy point there, which is not bad considering how horrible this tape is. 36.84 if I could start on the actual line there. Yeah, so that wouldn't surprise me. Pull back to 21. If this bounced Monday or next week, that wouldn't surprise me. If it pulled down back to its 36.84, the old buy area, or even below that, 35, that wouldn't surprise me either. But eventually, like I say, quarter after quarter, year after year, these guys are going to deliver the growth. And I believe this is one of these stocks that are going to be, new leaders. And I'm going to stop right there and just say, in honor of the great Steve Jobs, I have one more thing. Instead of signing off, I want to go through some of these names that I'm looking for. I'm not looking at NVIDIA. I know a lot of people want to say NVIDIA, this thing looks like it's rolling over. $3 trillion market cap. I'm not looking for these. I'm looking for the stocks, between 2 billion and maybe 50 billion that could 10 bagger for me or 5 bagger. That's what I'm looking for. TGTX is certainly one. I mentioned earlier in the earnings number, HROW, this could be another one. HROW could be another one. In the drug sector, we saw a move from Solano Therapeutics last week with their approval of a drug, that they said that they're going to start selling and launch in April. So sales growth and earnings growth probably coming from this drug stock, down the line. It's only got a market cap of 3 billion. So, a 10 baggers, 30 billion, not out of the realm of possibilities. Other than the drug stocks, I think you're looking at some of the cybersecurity names, which is an essential. Checkpoint Software, why can't that be a leader? I don't know. It's got a market cap of 25 billion. I kind of like it. Rubric has shown signs, it's 12 billion market cap. It's, recent IPO. It had this nice breakout, formed this base, now sold off. But, give it time. They're taking market share. Why not, right? And even some of the old standbys like Zscaler in this cybersecurity group, why not, right? It's been going sideways for a long time now. It's got a 32 billion market cap, but just trying to keep an open mind here. Some of the other ones that I really, really like, Robinhood, I like what they had to say last week. Now, this is a 37 billion market cap. It's not a small, a micro cap stock. It's a big company, but could they be, a 5 bagger from here? Sure. I don't see why not. That's what I'm looking for. Some of these smaller companies like Dutch Bros, it's less than 10 billion market cap. I listened to their Investor Day webcast on Thursday. They're opening stores like crazy. They're only in 18 states at this point. So, they could expand, they will expand. So they have what, 32 more states to go? Canada, Mexico, Europe, China, Australia. They could go, you could be buying this thing and they could be like a Starbucks. Why not? Uh, why not? So, yeah, why can't a 10 billion market cap go to 50 over time if they deliver the earnings and sales growth? Like I said, earnings and sales are going to drive the stock longer term. This correction will end at some point, and those companies with the sales and earnings growth, they will be rewarded. Wall Street's addicted to growth, like crack addict is to crack. They're going to come back and respond to growth. So pay attention to the companies that are delivering sales and earnings growth. Reddit, I think this one, at what is it now? Less than 20 billion market cap. They've got what, 2 or 3 times the subscribers of Twitter. So Twitter was valued at 44 billion. I don't know. Over time, I think these guys are going to deliver the goods. I just trying to keep an open mind here to younger companies, smaller companies that could be big winners. Once this correction's over. DoorDash, this is not a small company, 76 billion, but I still like that one. I like the business model. Spotify, obviously, I think they're like Netflix, where people are not going to get rid of their subscription to Spotify. Like they're not gonna, that's like the last thing they're gonna do is get rid of Netflix and Spotify. GoDaddy, I don't know, maybe it's top, maybe it's in a stage 4 decline, but maybe, a 25 billion market cap, they could be a big winner. I don't know. I'm just trying to, and I'm going to research further. And these things are going to stand out, as when the market rebounds, when, not if, when the market rebounds. This is a KVYO, it's got an 8 billion market cap. maybe they deliver the sales growth and earnings growth going forward. That's had a nice steep correction there at 37% off its high, but I'm just trying to keep an open mind and definitely going to research stocks that are delivering sales and earnings growth, and they will show up. That'll be pretty obvious once we have a new uptrend. So, you don't have to go searching for them too far. But like I said, I believe sales and earnings growth are the driver longer term, and that's what I'm looking for. But we had, the quasi follow through day last week. There were no leading growth stocks, so, it was definitely prone to fail. Anyway, that's it for me. Thank you for watching. I will have an updated report on Monday morning with probably some insurance and gold stocks. Anyway, that's it for me. Thank you for watching at mcstockcharts.com. We never give up.